Welcome to the Las Vegas Real Estate Report for March 2025. In this video, I'm going to cover the February Las Vegas area housing stats, the interest rates. It's the same old story, folks. They've been hovering right around 7%, just a little bit under for a conventional fixed rate. New home builder incentives. I'm going to talk a little bit about what's going on with the new home builds. There's definitely some incentives. There's different models and business models that the builders follow, but we still are finding great deals because the interest rate is still sort of high. Comparatively speaking, there are great opportunities in new builds, especially if you're ready to move quickly for the quick move-ins. So we'll cover opportunities for buyers, sellers, and both. My name's Jan O'Brien, and my partner and I are team leaders at Simply Vegas. You can follow us on YouTube here as I'm recording this. We're also on TikTok and Instagram. We have an amazing team of experienced real estate agents who cover all areas of the Valley. Make sure you reach out to whoever might have sent this video to you. And if you're not already, subscribe to us on our YouTube channel where we post this once a month. All right, let's dive right into the numbers for February. 2 months in a row, the median sales price, which is a new historical high for Las Vegas, is $485. We're finding it to be, we're interesting to see that it may stay about flat here, if not tweak down a little bit. I just don't know if it's going to continue to go up. There's a couple interesting things happening in the market as we'll look at the numbers for next month. But right now in March, what we're starting to see is a little more resale inventory come onto the market. Folks listing their homes. The buyer demand is kind of steady for what we've been seeing. It's not to the standards of what it was pre-COVID and so forth, or actually during COVID, it was when it went off the charts because the rates were so low. But we're really recovering from all of that. Bottom line is many people are still in a space of waiting to see what's going to happen, which is the theme we've heard for the last 2.5+ years, almost 3 years, for folks to wait for the interest rate to come down, sellers not wanting to sell because they have a great interest rate, sub-4 interest rate. But I think people are getting used to the fact that, the normal is in these high sixes, and it may come down a little bit this year. We'll get to the mortgage rates in a little bit here in this presentation, but I still think it's going to be in the mid sixes to lower sixes. We're not going to see the fives this year based on the things that are trending now. Of course, the economy, things that are happening in the country and the world can impact what's happening with the interest rates, as you know. So median sales price, $485. 2 months in a row. That's up 5% year over year. So these little ticks up and down represent year over year comparison for that particular stat. So units sold year over year down 6% at 1781. And I'm just talking about single family. New listings up 10.5%. 2799 new listings came on the market in the month of February. This is up 50%, which means inventory is up 50% year over year. That 5229 represents at the end of February, there were 5,229 single family homes listed on the market in the Southern Nevada area that's covered by our multiple listing service that did not have an offer. That's up 50% compared to this time in February last year. Effective months inventory, 2.9%, meaning, 2.9 months, which means if everything stayed the same and we had the same demand and the number of homes, it would take almost 3 months for the available inventory with the comparable demand to be depleted. Here's the numbers for condos and townhomes. I like to report every month on the median, single family, and the other stats. This is about what it was last month. 28% of all properties that sold in February were cash. Distressed properties continues to be well under 1% of all sales at 0.6%. This is the chart that I have been tracking for going into our third year here to just show the historical median sales price movement since January of 2023 to February of 2025. And you can see how things were flat for the beginning of the year 2023. And then we had this movement up and down, ending the year at 445, 449. And then in January, it dropped down of last year. And you can see we had steady increase up to this 480. And then it really just did this, kind of stayed in that 475 to 480. And now here we are 475 in December, and the first 2 months of the year has been 485, and we think it's going to be pretty much in that similar range. All right, so what's happening with mortgage interest rates? So here's a couple things to look at. The 30-year fixed rate, and this is just the month of March from the 3rd to the 24th, and you can see the green means it went down a little bit, the red mean it went up a little bit, but basically 6.74. Here we went to 6.82, and we're as of the other day when I'm recording this, 6.77 is the 30-year fixed conventional loan, and you can see there is also an FHA and a VA, which is usually about a half a point lower. So most of the experts out there are agreeing that the projections are continuing to say among economists, mortgage folks, the real estate industry, around 7%, possibly decreasing to the, right above 6% by the end of 2026. So that's a whole nother year. Now the Fed just met, and they did not move any the short-term interest rate down at all. They're continuing to watch, because the Fed is the short-term rate, which ultimately can impact the mortgage interest. But basically, the industry will bake in those changes based on the projections and the forecasts. And they're really looking at the 10-year Treasury, what's happening in the markets, what's happening with inflation. Those are all the things that are making the Fed decide what to do. And it's also what then impacts the mortgage industry, how the markets react to what the Fed does. So bottom line, we're going to see the sixes for a while. So the U.S. housing market is anticipated to remain largely stable through the year, comparable to what we've had last year and where we're at. Maybe a bit of a growth of 3% or less, okay, in sales. And we're starting to see a little pickup of that. We need to watch it for a couple more months to really get a sense of it. Now, one of the concerns that we have here in the Las Vegas area, and it really depends to see how things weigh out, because if you listen to Jerome Powell, he's talking about transitory inflation in the past, and now are the tariffs potentially transitory? Is that going to go away? And they're looking at those indicators for whether or not they're going to move. Most people feel that there might be two rate adjustments in 2025. We're going to have to see. And like I said, that will not directly impact the mortgage interest rates. They will either make those changes, and then they watch and see what happens with the market. Usually the interest rate will make a change if there's a forecast of it going down. They'll make it days before the Fed does that, and then they can rebound and go back up based on what's happening in the markets, and particularly what's happening with bonds in the 10-year Treasury bill. But construction costs, the builders are anticipating their construction costs are going to go up with imports on building materials and so forth from Canada, China, et cetera. The builders are anticipating an average increase of 9,200 in home constructions due to these tariffs. So we're going to have to watch and see what happens. If they stay in place, we're certainly not going to see new home prices go down. If anything, they're going to go up. And then we're going to have to see how that impacts our market, because we sell a lot of new homes. There's a lot of new home. There's over 35 communities across Las Vegas selling new homes right now. And here's a great thing to show you right here. 236 communities. That's probably changed slightly because there have been some communities that have closed out for properties like KB and Pulte, all of them really, Lennar. And we're starting to see a bit of a trend where they're not bringing as many they're not opening as many communities that we've seen in the last couple of years, which I think is indicative of concerns about what's happening in the market and whether or not there's still going to be a buyer demand and the interest rates are going to stay high. So what the builders continue to do, the big picture I want to get across here, is where are the opportunities in new builds? This is just showing various, they're all over the valley really, and out in Pahrump as well, and Mesquite, Boulder City, there's some properties out there, but they're all around the valley. The builders continue to offer lower incentives better interest rates if you work with their in-house lender. This is just stuff that's happening right now. If it can close in April and even into June, we're having everything from a 4.625, 5.5 for a fixed. This one is 4.999. Need to put 10% down. Here's a VA at 3.99, basically 4%. Here's a VA at 4.5, and this is if it can close by April, and this is if it can close by June for that builder, which is Rich American actually. There are tons of different opportunities out there. The key is it changes almost weekly. You must work with someone who really understands what the builders are doing, has connections with the builders, and knows where the negotiations can be. We are successful in negotiating for many of the builders that have quick move-ins, everything from not always price, but sometimes we can negotiate price, but we can negotiate interest rate, getting closing costs covered. And in some cases, it just depends on how long their inventory has been there, being able to negotiate all for you. The other thing that's powerful for right now for us is that and for you, as far as paying commissions, is the builders offer commissions to us. They'll pay a referral commission as long as we're the ones who go and introduce you to the property, meaning you don't want to go to the builders or sign up online. If you want us to help you negotiate and represent you and have the builder pay our commission, we need to be the one that registers as you, takes you the first time. I know it's exciting to go look at homes, but if you really want some representation and have us take care of that for you, we've got to be the one to do that first, okay? So on the resale side, it's this tale of two types of homes that I have been saying for months on this channel, and that is homes that are on the market that are needing work, needing not just, they're not meaning that they're in bad shape. They may be in great maintenance, but they may be outdated. So homes that are 15, 20, 30 years old that are on the market where the homeowner has not done anything, bring it to today's standards, those properties tend to stay on the market longer. Why? Most buyers don't want to jump into a situation where they pay for a home with today's prices and the interest rate based on what we can negotiate on a resale I'm talking about, and then have to go put 30, 40, 50,000 in renovations into the house. Now, there are opportunities to negotiate, maybe incentives from that resale seller who will pay to help your closing costs or bring your interest rate down. But many people, it's a process to get people to understand what the price of their home, what the value of their home is based on the, what's the condition of it into today's standards. So there's the tale of that side of the house. And then the properties where homeowners they're either newer, 5 years old or so, or they're 20, 30 years old, but people have updated the flooring and the kitchens and the cabinets and so forth. And they look more like what you would get in a new home today, even though it's sitting in a 30-year-old frame. So there's benefits in some of those homes. A lot of them are in bigger yards. They might have a pool. They may have other amenities. Those homes will tend to move faster. They will sell quicker. They may have multiple offers, and there's not as much opportunity to negotiate if it just came on the market, as an example. So everything is very situational based on what your goals are. There are opportunities in builds. There have been for the last several years. There will continue to be great opportunities to get you into lower interest rates and not pay 6.8, 7.25, or even, 6.5 for an FHA or VA. I just showed you there's opportunities to get in around the 4%. There's temporary buy downs. There's a lot of things. And especially if the builders are paying for those things, we'll sit down and crunch the numbers with you to see if it's a good deal for you. For sellers, if you're a homeowner thinking about selling, you're just tired of, you love your interest rate, but you're really ready to upsize, downsize, find that next house, whatever the reason is, and you have been hesitant to do it, you can wait until, like everyone else, until the interest rates, whenever that's going to be, 2026 or beyond, the interest rates get a little lower and more people jump into the market to try to see if you can create a bit of a bidding war. But the problem for that is if you're also going to be a buyer is you might get a higher price on your home, for example, but then you have to go be the buyer and you are now negotiating in a market that's saturated with buyers with maybe not as much inventory. That's potentially what could happen. So it just depends on, again, what your situation is. If you reach out, we'll sit down. We will do a consultation. We will crunch the numbers. We'll show you what the bottom line is. We'll do a side-by-side comparison so we can help you financially make a decision if you're looking at new home versus resale or 3 different new homes, the value of that deal, and look at everything from the pricing to the savings and so forth. So if you have a home that's been updated or it's newer, there's an opportunity right now to basically get a good top dollar, maybe get a competitive bid, and then go purchase either a new home or a resale and take advantage of the things I'm talking about right here. All right, so that is it. There's really not a lot of new news. If you've been following the channel, if not subscribed, I say a lot of the same things. What's different this month may be starting to see a little more inventory come onto the market. Buyer interest is mixed. It's steady. It's picking up slightly, but there's still a lot of people that are waiting to see what happens with our economy, what happens here in the United States in particular, and what's going on. And people have different levels of comfort. Are we going to have a recession? It's like, and there's so much stuff that's in the news. Who knows? We're not going to know till we know, right? Reach out to us, follow us on social. We're here for all your local Las Vegas real estate needs, whether you're buying or selling. And we'll see you next month for the real estate update